In my last YouTube video, we created an automated trading strategy together. It took us about 30 minutes, but in those 30 minutes, we created this script right here, which took two exponential moving averages, and it turned it into a full-fledged trading strategy, which allowed us to create a simple buy and a simple sell variable. Now, what's interesting about these variables is we could connect them to ThinkOrSwim to place automated trading orders, both for a buy side order along with a sell side order. In today's video, I'm going to show you how to combine this buy side order with the volatility box models and show you how effective that strategy actually is. This is a simple set it and forget it strategy in which you can simply place an automated trading script as soon as we see, say in this case, SPY appear on our live scanner, and let ThinkOrSwim do the heavy lifting for you. Now let's get started with first taking a look at the S&P 500 along with the Nasdaq ETF. Why these two symbols? Well, they were the two markets which appeared on our live scanner, which I think were the biggest names. We had a lot of names appear today, but if I show you SPY breached its conservative volatility box models for a long side entry, this is something that doesn't happen too often. And we had the Qs doing the same but breaching their aggressive models. We also had nearly every single sector appear. You'll see XLK, XLY, we had XLC, and we have our volatility box models that work on those markets as well. Now, every single time you're seeing this blue arrow, that's when our automated trading script is telling ThinkOrSwim to buy for whichever this market is. Now, the entire process is quite simple. Whenever a stock appears on the live scanner that you're interested in placing this entry for, we would simply right click and then select buy custom and with OCO bracket. This is assuming you haven't already saved it as a template. When you do this with OCO order, you can choose whatever quantity you'd like. Say you'd like to keep it at the 100. I'll select the settings icon, select XLK, select study, and with the automated trading script that we had created, we can simply write something like plot signal is equal to ti_auto dot buy or ti_auto dot buy. And now ThinkOrSwim will automatically wait for this condition to be true, or rather this arrow to plot, and then try and place a bid order. I'm going to join the bid for this particular order, and this is how we would place the order. I showed you how to do this at the end of the previous video. Now in today's case, I want to show you where that order would have actually executed inside of the S&P 500. We breached the aggressive models here. This is the first time we appeared on the live scanner. This is where we place the automated trading script. As soon as this happens here at 9:30ish, ThinkOrSwim is waiting and watching for our conditions to occur and be true. And the first time that happens is when this blue arrow is plotting. I have that arrow plotting just so it's easy to see when that automated trading script executes. That executes right here. This is where we join the bid and in the candle of 11:18, and that bid at the time was near 582.30. So that's where the entry is on the S&P 500. Now I contrast this with the Qs, and you'll see that the Qs look very similar. Now, unlike the S&P 500, the Qs did not breach their conservative models. We stuck just inside of our aggressive models, and the actual order that ThinkOrSwim would have executed, and in the case of the Qs, the bid that we would have joined is at 507.90. Now, just briefly, if I show you DIA here is where ThinkOrSwim actually placed the order, would have rather gotten you into the trade. This is shortly after 10, and I want to also call out that there is some heat that you would have had to deal with here inside of DIA, but a stop outside of the volatility box models holds perfectly fine here. Now, last index we have, IWM, which did not breach the aggressive volatility box models. So that gives you an idea of the volatility inside of SPY, where we had the entry where the blue arrow is, DIA, where you had the entry with a little bit more heat, and the Qs, which followed more with the S&P 500 today, but a little bit less volatility in that we didn't even make it to the conservative volatility box models, unlike the S&P and the Dow where we did. Again, be sure to check out the automated trading tutorial that we created over the weekend. I'll leave a link to it in the description box below, just so it's handy for you to check out. Take care, everyone. Happy New Year, and I'll see you in the next video.